Joining us now, Hitesh Oberoi, the MD and CEO at InfoEdge. Hitesh, always good to speak with you and find out really what the latest is, particularly as the stock is now at a record. So continuing to just rise higher this year. What's working? Let's just talk about the valuations. Where you feel is a fair valuation. What you feel some of the key factors are at play at the moment, and what is really working for InfoEdge.
So actually, we don't like to comment on valuations because we don't really understand the stock market. What we know for sure is that the market shows you all prices. Just 6 months back, our stock was at half this price. A couple of years ago, we were stuck at 1/4 the price. So we've seen all kinds of prices in the market. What we know and what we understand is that we need to keep working on our product. We need to ensure that our customers are happy, and we need to keep innovating, and we need to keep building a leadership pipeline. And that's what we are focused on, and that's what we want to do. Of course, there are some macro trends and headwinds in our favor. The truth is that after COVID, the world has become much more digital than it was earlier. COVID has actually played the role of a chief digital transformation officer in some ways. It's sort of accelerated the trend to digital adoption from everybody, whether it's large businesses, small businesses, kirana stores, consumers, teachers, students. Everybody is now on the internet. And I think this trend is sort of here to stay. And there is a lot of investor interest in companies which are riding this trend and which are seen as leaders in the categories in which they are sort of present. I think that's also really benefiting the stock right now.
All right. What have also been some of the learnings, Hitesh? We're always trying to probe you for the new developments and what's in news, but also talk to us about, how perhaps the last year has changed business strategy or evolved it in some way, what you're going to be taking forward into the next year or two.
See, we are pretty clear on what we have to do. See, there are these 4 verticals we have inside the company: jobs, real estate, education, matrimony. We want to invest more in these areas. There's a lot more we can do in these categories. They're large categories. We are just scratching the surface. So one pillar of our sort of strategy, and what we've also learned, is that we need to keep investing aggressively in all these verticals. They're only going to grow with time. Our ideas, what is limiting us is our ideas and our imagination more than the market opportunity out there in front of us. So we have massively sort of increased our investment in product, technology, data science, infrastructure in all our internal businesses. We are also, a second part of our strategy is to invest in adjacent areas in the verticals we are already present. So we've invested in at least 6 companies in the job, education, HR, real estate spaces in the last 3 years. We acquired one, iimjobs. We have, started seeded a couple of new ventures inside our company. We are piloting a venture in the blue-collar space, job here. We are building an AI platform for learning called Big Shift. So continuously sort of invest and innovate in adjacent areas. That's the second part of our strategy. Third, of course, we are looking for, opportunities to consolidate. Now here, of course, some of these acquisitions, if they play out, will be opportunistic. But we've looked at least 5 or 6 companies in the last 6 months. We haven't found anything which is available at a very reasonable price right now. Because the valuations are sky high everywhere, including in the private market. But, that's the third part of our strategy. Fourth, our investee companies have really done well. Zomato and Policybazaar in the pandemic. Again, COVID has played out well for them. The demand for insurance going up, food deliveries back with a bang. So if these companies continue to execute well, there is no reason why we would not want to stay invested in them for a very, very long time, because they also have an opportunity to build really large platforms in their area, in their category, right? And fifth, we will continue to sort of invest aggressively as financial investors and try and find more Zomatos and Policybazaars for ourselves in the long run. So the learnings from the pandemic, one, digital transformation is the buzzword, and digital transformation is here to stay. And digital transformation is going to be very, very big for the next maybe 10 or 20 years. And companies which are able to build great digital platforms, which are seen as leaders in their categories, which are willing to invest aggressively for the future, will probably win in the long run.
Hitesh, just to probe a little deeper on all the M&A opportunities that you talked about, help us understand for which businesses have you identified alliances?
So, the M&A piece is more focused on the businesses we're already in. So, like jobs, so real estate. IAM Jobs is one example. We acquired IAM Jobs about 12 months ago. It's worked out well for us. We are looking to, for more companies to acquire in adjacent areas. So there's stuff we do inside the company. There is stuff we're investing in inside the company. But there are other spaces. We, for example, invested in a company called Great HR, which is an HR services company. They target small and medium enterprises. So similarly, there are such opportunities in to consolidate and to invest both in matrimony, in real estate. There are a bunch of companies out there doing stuff. And education, we made 3 investments, Univariety, No Paper Forms, Coding Ninja. So again, in these spaces, there are large companies which could be available for acquisition. There are startups which we are sort of investing in. For a large, what we're also clear on is that we won't be making a lot of large acquisitions. Big acquisitions are very hard and they're not very easy to sort of make them sort of work. It's not very easy to make them work. So, we don't want to bite off more than we can chew. And we know that if we do a large deal, we'll maybe do 1 or 2 in the next 2 or 3 years. So we're looking at all possible opportunities, but we don't want to rush into them.
Last quarter, your cash at book level was at 3,300 crore rupees. Tell me, what is it at currently at this quarter? And will all of the cash be earmarked for acquisitions whenever they come by? Or are you utilizing it in any other way?
So the cash balance remains the same. The truth is that the Naukri business is back to making money. And Naukri at steady state, we believe, can generate an EBITDA of more than 100 crores a year. And that's what is likely to happen if business goes back to normal this quarter. So, our core business continues to generate a lot of cash. The 99 acres business is also breaking even at a cash level. Even Shiksha is cash break even. So we don't really need a lot of money for in 99 acres and Shiksha either. Jeevansathi is where we are investing. So we've upped our marketing spend substantially in the matrimony space because we're trying to gain share, become a serious player in this market. So that business is losing maybe 25, 30 crores a quarter, but that's about it. So, because our core business is very profitable, our cash on the books will continue to grow. Now we are making a few financial investments, but the check sizes there are smaller. They're not very, very large. So that will continue. So you're right. Our this 3,300 cash pile we're sitting on is unlikely to sort of reduce in size unless we make a large acquisition.
Be more value or revenue accretive in the next half of the fiscal year? Would it be Naukri? Would it be Jeevansathi? Would it be 99 acres? I know I'm asking a parent to choose the favorite child, but purely on performance parameters.
See, Jeevansathi never slowed down. So Jeevansathi has kept growing through the pandemic, and I hope that it continues to grow even after things sort of stabilize on that front. Now, see, the big if here is will things go back to normal or not, right? Because we are seeing a second surge in some cities on the COVID front. Now, assuming that this unlocking continues, there are no more lockdowns, and things continue to get better on the COVID front, we expect both the Naukri and the 99 acres business to bounce back very sharply, actually, in the next 4 or 5 months, if things continue to get better on the COVID front. And these are large businesses. So if they bounce back, they will, of course, end up moving the needle a lot more than the Jeevansathi business. But Jeevansathi and Shiksha, we expect them to keep growing irrespective of what happens going forward. But fingers crossed. I mean, like I said, the early signs are encouraging. October, November has started off on a good note. But, a lot of our clients are annual clients. They're subscription clients in Naukri and in 99 acres. A lot of our renewals are due in the last week of the quarter. So we will know only then on whether this sort of rebound or in the economy is for real and is sustainable or not.
Yeah, a lot of hazy gray areas going forward. But Hitesh, you have a better understanding of businesses, especially when it comes to the digital end of it. The fact that the world has to convert to digital is a given now. We've seen that play out for the last 7 months of the pandemic. But now, where do you see the next leg of disruption really coming in within the digital universe?
So, what we've seen, I mean, if I just we've been around for a long time. So if I just go back and look at what's happened, see, every few years you see a new wave, right? So, there was search and Google, and then there was social networking, and then there were smartphones and AI, machine learning. In India also, if you look at it, e-commerce became really big a few years ago. Then the food companies, and the grocery companies, then fintech, then now, actually right now as we speak, edtech is maybe in bubble territory for all you know. There is a lot of action in edtech. Everybody's flocking to edtech companies. Edtech companies are seeing a surge in revenue because of COVID. It's in many ways, edtech is like a work from home category, right? Health tech, I think, is another sort of frontier which is waiting to get disrupted. Is another category where there's a lot of action. It's only a matter of time, before things sort of you see something big emerging on that front. And as investors, we are seeing a lot of opportunity everywhere. There is a lot of action, for example, in agri-tech. There's a lot of action in Dukan Tech. There's a category of Dukan Tech. There are people trying to sort of make smaller businesses go online. There's a lot of investment, and there are a lot of companies in that space. They're trying to make your neighborhood kirana store, your neighborhood restaurant, your neighborhood grocery. All these guys go online in a big way because that's the next big thing. So I think now there is action in almost virtually every sector you can think of in the economy on the digital front.
That's quite interesting and intriguing. Dukan Tech, I didn't hear of that up until you just mentioned it. Great to have you on the show, Hitesh, and great insights as always.
Thank you.